Hello, good morning. So we said in the video yesterday that today we're going to be we'll start placing trade on this particular hands, and I'm going to be showing every of the process here online. So this morning we're looking at this particular trade. This is GBP USD. As you can see here, we have GBP card here, we have Euro card, we have Euro USD. So we're looking to take a trade on GBP USD or either Euro USD. Now, I need to quickly point out that every of my trade on this particular account will be based on these few things, uh, the rules that are guiding my trading. This particular account, everything that I'm going to be paying attention to. So in the morning, say my morning prayer. That's very important. Then afterwards, look at my goal for the year. That doesn't have anything to do with trading, but it's part of my routine, like housekeeping that I need to do in the morning. Then read this particular trading plan again. Even though I'm the one that writes it, I'll still read it every morning. Not necessarily read it on videos like this, but I'm just showing you so you can have an idea of what my housekeeping look like. Then create a to-do list, everything that I needed to do during the day, regarding trading, regarding every other things. I'll do that, and check the Forex Factory for any major news. So we'll do that together now. Let's go on to Forex Factory. We really have AUD, which I don't trade. Then there is FOMC meeting minutes on by 7 o'clock, so most likely I will have closed my trade before that time. So there is no major news today, so I can easily place my trade without any fear or doubt. So having said that, then let's look at our entry confluences. So these are the few criteria that will determine every position that we're going to take. They're going to determine all position that we're going to take. So let's just space this out a little bit. Yeah. So number one thing is entry criteria for me is this 4-hour moving average with an accumulation of 15 minutes. I'll show you an example. So let's assume here, let's go on 4 hour. So I won't be able to use this because this is just a break. So if it comes back to retest here and it's accumulated, then I can take that. But let's look at this. Okay, this is a very good example. The major trade for me. See what I'm talking about here. So this is, if you look at the 4-hour time frame, you see this is the moving average, and when you come back to 15 minutes, you can see here that there is an accumulation here. So it's been the price has been going around here. Let's play the retest. You see the price playing around this zone, playing around this zone. Yeah. So having seen this, then going to take a position like this one. I know for this example, you can see that I already see what is going to happen, right? So but I just want you to have an idea of what I'm looking at in case we don't see it before taking this kind of a trade. I want my stop loss to be on the previous low. Sometimes this might break to this point and kick the stop loss. It happens. So this is part of what the market can do. But once that happens, don't move your stop loss. Just let it kick it. And if it come back to retest the 15 minutes moving average, you can re-enter again. But let's play this and see what it look like. I'm just going to increase the speed. I don't have time for all this. So this is what we're talking about. So if I see any 4-hour break and retest, it's a very, very good trade. And you can see how this plays out. So this is the kind of trade I'm talking about. I can show you over and over and over and over again different 4 hours retest, like this one retest here, you see it break down, retest here, come down, retest here, come down. So that's our first entry criteria or confluences. If that happen, we're taking the position based on what you can see. Then support and resistance, this is no brainer, like almost everybody pay attention to this, but I don't normally use this. Like you can see on my chart, I don't mark any support level or resistance level, but needless to say that this is a very good one to look out for as well. If a price is around a support level or a resistance level, we may take trade. Not every time, but let me just show you an example now. You can see the price has been touching this point, touching this point, touching this point. You see here. So if you're placing a trade, let's say for example this particular one, you want your position to be on at least this previous high, or if you're taking this on at least on this previous high. So that's what that means, but that won't determine my entry most of the time. But let's say the third one, a retest of the daily moving average with accumulation of 15 minutes time frame, with a breakout and a retest of 15 minutes time frame. So this is the trade for today. That is what determine our trade for today. As you can see here, the daily time frame moving average, right? This is the daily time frame moving average. The price has come up to here, retested. You can see this particular one break out, but quickly retrace back into that's moving average. Then we have this one coming this morning to retest it. Then we want to go on our 15 minutes time frame and look out for this candle coming to breaking this 15 minutes moving average, coming to retest it and going down. Then we are looking at 1 to 2, just as you can see here. So this is the kind of trade that will be taken. But remember, we have a rule that will follow, and this is the rule: a retest of a daily time frame moving average with accumulation on 15 minutes time frame. Here is the accumulation. Like here is the accumulation here on 15 minutes time frame. It's easy to quickly get an accumulation on 15 minutes time frame. Look at an accumulation here as well, a breakout or a test. If you look at this one, I think we have 4 hour moving average or 1 hour moving average here. But that's not the kind of trade we're talking about for now. We're talking about the daily time frame, which is our last entry confluence. We have 3 entry criteria or confluence or whatever you want to call it. So we'll be taking trade based on either of these 3. Now let's go to exit criteria. Number 1 is the set take profit. Don't be tempted to say, oh, with the way this candle is moving, I think it's going to go far and my take profit, I'm moving my take profit. You may you may just shoot yourself on your leg. So don't do that. Then set stop loss. This is very important. It's also an exit criteria that you're getting out of this trade. If it goes ahead and eat your stop loss, just let it go. Move away from your screen. Then you can later come back to determine whatever you're going to take again. But I think this particular one is very important. I emphasize that even myself, this is where I make most of my mistake. Having look out for a trade in the morning, plan, look out for so many factors that could determine the direction of the trade, and eventually taking the trade. If the trade end in loss or I exited the trade, then the subsequent trade that I'm taking, I'm not doing any analysis. I'm just taking the trade based on, oh, let me see, look at what the candle do here, look at what is happening here, and most of the time it's ending loss. So let's be careful of that. Then, having said that, the other exit criteria is a failure to break a support resistance level after 1 hour. After 1 hour, say for example, this price push up to here, maybe let's say our stop loss is even far away. It goes to this point. This is like a support level, so to say. It goes to this point, and the price begin to misbehave, pushing up, pushing down, pushing up, making an accumulation like this. Exit. So this is another exit criteria. Then the last one here is on what's it called now? Higher time frame moving average is retest. So a good one will be like, you can see we have the 4 hour moving average here. If our price come up to this point and fail to break this level towards the downside, maybe begin to accumulate again here around this 4 hour moving average. Remember, 4 hour moving average is also like our criteria for, say, a buy in this particular scenario. If the price come here and accumulate, then we're looking out for a buy. So why should we hold a trade that the sell is still going to continue here? You see what I'm saying now? So on this level, if the price fails to break this as it's coming down, we exit, and these are the exit criteria. So what else do we have there? So the trade management now. If position taken on a clear trend with price over all moving average, add half of the determined entry position on a breakout and retest of a key level. Note, exit if trade reverse and start accumulating loss up to the loss percentage. So if you have a set loss percentage, say for example on this particular account, like I said, I'll only be risking 1% for now until I push the account up over 2%. So if I'm over 2%, then I'll go on to risk 2%, so that I can pass this as soon as possible. Now, if I calculate my position size, and let's say the position size said I should use two lot size, once the candle move like what we have here, immediately the price break this level, okay, yeah, we can still do it looking at what the candle is doing, and maybe retrace back up to here, right? We had two lot size here, and when price come here, break this level, and do a retracement up here, we had one. So that's half of the determined position. Remember, what will have given us the 2%. Now that we're adding, we are putting up more risk. And that is why I said you don't keep your stop loss here anymore. So once you do that, you don't keep your stop loss. You want to manage this trade, monitor what is going on. If it retrace and begin to accumulate loss, then maybe begin to push into your stop loss, or get into the first entry position, and you're accumulating more loss. Exit the trade. Don't wait till, oh, let me see what is going to happen, because you're going to accumulate more loss because you're risking more now. You've put up a position of say 1% here. Now you've had another 1.5, I mean 0.5 here. Remember, it's not at your entry level anymore, right? So it's going to accumulate more loss. So I'll keep repeating this for quite a number of time, and every time I take a trade looking like that, so that we understand what I'm talking about. Never had a position to a losing trade. Say for example, maybe where is it now? Maybe this particular trade. Let's say that I am looking for a buy at this level. So now that this trade is going against me, for no reason should I add a position. Say, oh, maybe there's a support here, it's going to push up and add position. No, never do that. So no, don't add a position to a losing trade. If you can stick to this, you'll be good. Then calculate a determined loss percentage on your account, and set stop loss on every trade taken, and never move the stop loss for any reason. Do not move the stop loss for any reason. So on calculation, we'll do that on baby pips calculator. This is our baby pips calculator. Our account is 200,000. No matter whatever your account size is, you put it here. Then your percentage, say you're risking 0.5, or you're risking 1%. So whatever your stop loss is, remember, you don't just determine stop loss on you in your head. You look at the markets, like this particular one now. So my position is here, and I'm looking at, okay, this is the previous high. Sometimes I may want to shoot this if the volatility is high, right? So if in this case this is 40 pips, but in this case, because the volatility is quite low and there's no any major news, I can use this as my stop loss, which is 11. So you go there and put 11 as stop loss pip, and the currency is GBP USD. So this is what we are asked to use in this case, 18.18. So you place your trade with 18.18 here. In this particular case, I use 15 lot size. So once this push down to this level, like I said, if we have a surge up to this point now, I'm going to be adding another position 7.5 for it to push down. But remember, you can see ratio 5. So my ratio is 1 to 2, because we have our what's it called now? We have this guy. We have 4 hour moving average very close by somewhere there. Yeah, we have 4 hour moving average here. So it's the what we're looking at is 1 to 2, and this does not mean that it cannot push down, but I'm not moving my stop loss because the size I'm using is quite big, and I don't have a shock absorber, so to say, at the moment. So this is what we are looking at now. Let's say for example you want to take this particular trade now. maybe you're looking at this, right? Because there's a breakout here. Your stop loss might be here, right? This is 20, and you're looking out to exit this trade here, 1 to 2, exit this trade around this place. So this is what you will use to calculate yours, and it's GBP USD again. So it's saying that you should use 10 loss size. So that's just the idea of calculating and determine your stop loss level. Calculating and determine your stop loss level before, and so that's just it for this morning. Let's see how the trade plays out, and we'll come back to it later in the evening.